Success in life is founded upon attention to the small things rather than to the large things, to the everyday things nearest to us rather than to the things that are remote and uncommon. Booker T. Washington. Now, what do we do every day and found our success upon? What are the small things? What are the everyday things? It is 10 to 15 minutes each day following these charts, learning how to follow trends and price movement. It is not rocket science, it is charting art. 10 to 15 minutes a day, that is all we ask. The lessons we teach you here can be used on any stock, ETF, commodity that is chartable. And of course, the S&P 500, yes. The NASDAQ 100, yes. 20-year bonds, yes. Gold, yes. And of course, Bitcoin. Going to talk about Bitcoin at the end. Our advice continues for you practice trading Bitcoin not to be in it right now. Why? Well, look at what's happening. We see that 2-day crossing over heading down, and of course down again today, 8.70%. We'll talk about that here in just a minute, but first, let's go through our big four charts. We see the S&P up just a little bit, 0.09%, as again we look at the weekly chart where we always start. We can see that we are reaching a higher high for the week so far. Prices above that weekly trend line, that weekly vertical crossover originally occurred back on the week ending the 13th of November, Friday the 13th. It's not been a bad Friday the 13th so far, has it? Things have moved up relentlessly, slowed down after that first week, moved up, slowed down back on right there at Christmas, and then of course for the last few weeks has been slowly ticking up. We go to the 2-day chart. That's where we've had the trouble. We've had a sideways slide over the last many days, and what did that do for us? We had a crossover, then we had a crossover going up, a 2-day recross we would call it, then a crossover going down, and then this latest 2-day recross. And again, that occurred on Wednesday. Now this latest candle will finish drawing at the close of the market on Friday. See the price percent oscillator pulling away slowly from the red signal line, derivative oscillator heading up. Look at that half-day chart, and you can see for the last day and a half things sort of topping off in about the same place. So slowing down. Pay attention to what's going on that half-day chart, but more attention to the 2-day and of course to the weekly. And again, on that weekly, a little more than flat on the price percent oscillator, derivative oscillator still losing momentum. So we'll watch, pay attention, and see where these markets are going after the Martin Luther King holiday as we move on to this new year and the inauguration of a new regime here in the United States. We'll see how the market likes all of that as we click on through the weeks. Now, let's jump into the next stock index we look at. The NASDAQ 100 is represented by QQQ. What do we see going on there? It was up 0.80%. We look at the weekly candle, looks quite nice, higher high, moving up, price percent oscillator bouncing off the red signal line, trying to cross over. We may have had a fake out on that weekly vertical crossover. We talked about that. We've been watching it, seeing what it's going to do. And again, it had crossed and then pulled itself out. That happens. We talked about it as weak as that cross was. We see that the price percent oscillator, again, is trying to pull away red signal line. We see that the derivative oscillator is about flat. We go to the 2-day. What do we see there? Well, we see that 2-day trying to cross over, going up. It'll finish drawing tomorrow. What do you need to look for on the Qs? Well, that would be a 2-day recross going up along with a weekly vertical crossover potentially. So again, don't like it to get that sloppy, but my friends, sometimes that happens. That's what we're watching, paying attention to. We'll see what happens. Friday's a big down day. Then we could see, of course, what looks like it might be a crossover going up on the weekly chart, actually rotating back over, going down. Nothing's written in stone yet. We see for the last 2 days that strong up movement in the NASDAQ 100 on the half-day chart, price percent oscillator heading up, derivative oscillator heading up, and let's track that as best we can with our half-day trend line. That is where we are as far as stocks go. We're going to leave stocks and go to bonds. Bonds and gold down for the day. I like to see stocks one way, bonds and gold the other. It wasn't that way yesterday. It is that way today. That's good. That's just healthier, okay? What do we see happening with bonds? We have a solid green candle, which means a slowdown in the go down, as we tend to say. Slowing down in that down movement, not hitting a lower low. Price percent oscillator still going down. Derivative oscillator gaining downward momentum. So we are still negative. We go to the 2-day chart. It was flat and then moving up. Now it's starting to move down a little bit as we see a red candle forming. So we'll again pay attention to that after several days of sideways sliding after things bottomed out back on Tuesday, the 12th of January. So we'll continue to watch, see what's going on there. Half-day chart. What do we see? We can really see even more that sideways slide, but then again, what happened over the course of the day on Thursday, down in the morning, down in the afternoon. Price percent oscillator, though, is still just flat, hasn't crossed over. Derivative oscillator peaked a few days ago and is continuing to lose momentum. That's where we are. Lastly, on our big charts, we go to gold, down 0.06%. You guys know how much I want gold to cross over on that weekly chart and start going up. It ain't happening yet, friends. Price percent oscillator's flat. Derivative oscillator losing some downward momentum, but both still negative. Solid green spinning top means, again, slow down in that down movement. Indecision tending down. We go to the half-day chart. What do we see there? Well, it's trying to head up on that price percent oscillator, but still negative. Derivative oscillator still quite negative. We do have a nice green up candle forming. That is, again, is our Heikin Ashi candlestick. Was down for the day. Remember, Heikin Ashi candlesticks, I'm going to put that training at the end of today's video, just so those of you who haven't taken that, a couple of 100,000 people have taken that training. I want you to have it and understand why we use Heikin Ashi. Instead of the standard candlestick high, low, open, close, Heikin Ashi helps you follow the average pace. The average pace is much simpler to follow and critically important for you to understand. And why do we have, oh, I thought that was another trend line. That's not a trend line. That is a gray 200 period or 50 period moving average line. Okay, I was confusing myself. So that is where we are on the 2-day. Let's look at the half-day. Half-day, of course, crossed over going up back in the morning on Wednesday and sort of petered out. It's just sort of popped up in the morning on Wednesday, about the same in the afternoon on Wednesday, and then Thursday and Friday, just not going anywhere. So we'll watch, see where gold is, where it's going. Let's go ahead and adjust our half-day chart just so we're tracking that a little more accurately. There's where we are on gold. Now, let's touch on Bitcoin for you Bitcoin fanatics. Told you that Bitcoin peaked. It peaked back on the week of ending the 8th of January. Same place, the week ending the 15th of January, same peak. So what do we see happening now? We have a red open box spinning top. Lots of indecision. We see the price percent oscillator heading down on the weekly chart. Derivative oscillator peaked back there on that week where Bitcoin peaked at $40,793.68 and has been losing momentum since then. We go to the 2-day chart. And of course, this latest 2-day candle hasn't finished forming yet, but it will on Friday afternoon at the close of the market, heading down. We can look at that 2-day chart, see where we topped at about the $41,000 mark and losing momentum, heading down. Not a time to be jumping into a practice trade on Bitcoin. We've been saying that. Look at this half-day chart. Again, you can see where things peaked most recently and where things have been rolling over, heading down strongly. So, waiting to see. Whenever it's like with gold and Bitcoin, they can move in surges, and then they hit a plateau, and then it's like the market digests all that energy. blows off a bunch of steam, people take profits, and then they roll over. So what are you waiting for? You're waiting to see if indeed after this, and this is nice to see a pullback. Why? Look what happened back here when you had that past 2-day crossover, what we call a pullback, going down on the Wednesday, the 9th of December. Went down just a little bit and then crossed back over, giving you a 2-day recross, a jumping in point for your practice trade at around the $21,000 mark. And what did it do? Almost doubled your practice trade. Quite nice. So again, it worked nice last time. Might work for you again. Pay attention. Practice trade this stuff. Chart it. If you don't know what you're doing, you haven't practice traded for a long time, and then after that, that's another thing I'm going to put in for you. Fractional trading. So you take a little bit of money, maybe $100, and you fractionally trade after you think you're good at paper trading to see just how good you are. And you need to prove to yourself that you know what you are doing before you ever think about putting any substantial dollars in the market. We're not a stock calling service. We're an education firm. Last thing we want to see you do is go out there and defeat yourself in your own head. And if you start losing, and it's real money, you won't stick with this. You know what you'll do? You'll be one of those losers that says, this doesn't work. The market's not for me. It's all a big con and a ripoff. Those of you who've followed the channel for years and practiced traded and gotten good at this, you've watched over and over and over again how well these charts have performed over time. So I just urge you, keep practice trading, keep studying, keep reading, keep learning. Do all you can do to garner all the knowledge you can. Practice, practice, practice. How do you get to Carnegie Hall? Practice. God bless you, my friends. Thanks for all the support at Patreon. Thank you for all your support buying the books, the Stock Traders Journals, all that. God bless you, my friends. All the best from the whole team at Charting Wealth World Headquarters.